Facebook and Google, or Meta and Alphabet as I should probably call them, are two global advertising giants, and those two businesses alone actually represent 4.9% of the entire market value of the S&P 500. And advertising is the type of business that often takes a pretty hard hit, particularly very early on when economic times start to worsen. Advertising is generally one of the first areas in business generally where people can pull back on their spending, particularly when margins get squeezed and times get difficult. And that makes these two companies, Facebook and Google, or Meta and Alphabet, quite interesting companies to look at when we're going through increasingly challenging economic times. And luckily for us, both of these companies reported their quarterly earnings just this week. So in this video, I want to dive into some of the numbers that they reported. Meta, of course, is currently undergoing a huge amount of change with a lot of R&D spending in metaverse-related ventures, and Google is just a behemoth that tends to generate a lot of cash and is an interesting stock for a lot of people to follow, and shows up in actually quite a number of super investor portfolios at this point. And if you want to hear a little bit more about Google, that was actually one of the topics that I covered with Jason, the After Dinner Investor, on the latest episode of the Investing with Tom podcast, which just came out yesterday, as you'll probably seen this video. Now, of course, if you are considering an investment in either one of these companies, you really want to come to your own personal conclusions on what you think the future might look like for these businesses. But it's always nice to get a bit of an initial look into what the current expectations are for the company moving forward. And if we look over on Simply Wall Street here, we can see some analyst projections for stats like revenue, earnings, and free cash flow for both Meta and Google. And the trends in both of those companies are pretty similar, but probably a slightly less rosy outlook for Meta. Now, if we look at the analyst expectations for the next couple of years, analysts are expecting the revenue of Meta to grow from about 119 billion to about 150 billion, but they're more or less expecting earnings and free cash flow to remain largely flat. Earnings specifically to go from about 33.6 billion to only 35 billion in a couple of years' time. Current expectations for Google look a little rosier, with again revenue expected to grow and earnings expected to grow, but again earnings growing at a slightly slower rate than revenue, suggesting that we could potentially expect some smaller operating margins for that business moving forward. Now, if you're interested in checking out Simply Wall Street, which is the platform that I'm using to get this data, there will be a link in the description which will get you a 30% discount and also an extended 14-day free trial with the platform. Okay, so let's jump into some of the numbers and updates, firstly from Meta or Facebook. Now, the number one figure that you'll see probably floating around in a lot of articles to do with this earnings update is that Meta had a minus 1% change in their revenue for the 3 months ended June 30th versus that same 3-month period last year. And this is the first time in Meta's history that they have ever had a decrease in revenue year over year. There is some level of seasonality to Meta's business, given that they are predominantly earning money through advertising, but this is the first time that they have shrunk in the same kind of comparable quarter. So interesting to see that slight reduction in revenue. If we look at their costs and expenditure, we actually saw a 22% increase in total costs and expenses, which of course, if you're earning more or less the same revenue, in this case a fraction less, and you're spending a lot more money with expenses, you're going to have lower income from operations. So we saw minus 32% in income from operations and minus 36% in net income at Meta. And I think that those results from Meta, particularly the increase in costs, were largely expected. We've had Mark Zuckerberg come out and tell us that Meta are going to spend a lot of money on research and development related to the metaverse. And we saw that flow through directly in their latest headcount figures. Headcount was 83,553 as of June 30th, 2022, an increase of 32% year over year. Now, on the more positive side for Meta, we did see a slight increase in the usage of the Meta kind of family of apps. We saw monthly active people at 3.65 billion, which is an increase of 4% year over year. We also saw Meta repurchase quite a bit of their own stock, spending $5.08 billion on their Class A common stock, and they are still in a very healthy financial position looking at their balance sheet. So cash equivalents, and marketable securities were at $40.49 billion as of the end of June 2022. Digging a little deeper into the financial statements for Meta, it becomes pretty clear where these extra costs are coming from. Research and development expense for the quarter was $8.69 billion versus only about $6.1 billion in the same quarter last year. But all that said, Meta does still continue to produce free cash flow. Admittedly, it's down pretty substantially from last year, but they produced $4.45 billion in free cash flow for the quarter versus about $8.5 billion in the same quarter last year. Jumping over to Alphabet or Google now, we actually see a lot of the same trends around particularly the increase in costs. Admittedly, with the Google situation, it's nowhere near as extreme as with Facebook or Meta, but nonetheless, we did see a lot of those same themes. So firstly, looking at the revenue, we saw a 13% increase in revenue for the quarter ended 30th of June 2022 for Google. That was compared to a 62% increase when they reported earnings at this time last year. They had crazy growth last time around, and to still be growing off that kind of huge comp, I guess, is still pretty impressive. One of the interesting notes here is actually on a constant currency basis, they would have grown revenue about 16%. The US dollar is very strong at the moment, and Google earns a lot of money outside of the US in what are now weaker currencies. So interesting to see that data point in there as well. Again, a little like Meta, Google did have some slightly higher operating costs, which brought their operating income in at $19.453 billion versus $19.361 billion in the same quarter last year. So although revenue grew 13%, the operating income for Google was basically flat. Now, Google does have quite a lot of cash and other assets on their balance sheet. They have a big equity portfolio and also a bond portfolio as well. And that portfolio did actually take a hit in this quarter, which means that it did kind of drag their net income down a little bit. So although the operations of Google remain very healthy, although there are some cost pressures in there, we saw the hit to that equity portfolio come through in their net income. So their sort of other income was actually negative $439 million versus positive $2.6 billion in the same quarter last year. So that meant that their net income for the quarter came in at $16.002 billion versus about $18.5 billion for the same quarter last year. Now, Google, of course, is a huge business with a lot of different segments. They're obviously very well known for Google Search, but they also own YouTube, on which you are watching this video. And they also have a Google Cloud business and a category that they generally just call Other Bets. Now, if we look through those category breakdowns, long story short, every segment at Google, with one or two very small exceptions, experienced at least some degree of growth for this particular quarter. The big business, obviously, is Google Search. That grew from $35.8 billion to $40.6 billion, but they also experienced growth in YouTube ads and probably most notably in Google Cloud, which is a smaller component of their business at the moment, but it grew from $4.6 billion in the same quarter last year to $6.2 billion in the quarter just reported. The similarities between Meta and Alphabet continue here when we look at their R&D expense. R&D came in at $9.8 billion versus $7.6 billion in the same quarter last year. And again, Alphabet, just like Meta, has been repurchasing shares. So their diluted shares outstanding is now about 13.2 billion versus a little under 13.6 billion in the same quarter last year. And again, Google remains a monster cash generating machine. They had free cash flow for the quarter of a little under 12.6 billion. And they remain with that very, very healthy balance sheet with a lot of cash, a lot of equities, and a lot of bonds sitting there to give some downside protection should the business run into some issues. Now, the final part of these earnings from Facebook and Google that I just want to cover briefly, because I think it's a really interesting situation that's happening at a lot of American businesses right now, is the kind of foreign currency exchange. We typically don't see huge variation between the real revenue growth and the real earnings growth versus the sort of constant currency revenue and earnings growth. There can be some ups and some downs depending on the quarter. It tends to all kind of come out on the wash over a longer period of time. But in 2022, we are seeing the US dollar become exceptionally strong. And Google is an interesting example where they earn a lot of their revenue globally. Granted, a lot of it's from the US, but there is a lot of international revenue for Google. Yet the overwhelming majority of the costs for Google are directly in US dollars. So at a time like now, when the US dollar is very strong relative to other currencies, Google actually gets hurt a little. On a US dollar basis, they have basically less revenue than they would otherwise because the US dollar is so strong relative to these other currencies, yet they're having to pay the majority of their expenses directly in US dollars with this very, very strong currency. And of course, this could always go the other way. When the US dollar eventually presumably gets weaker, this will be a tailwind for Google, but right now it's a little bit of a short-term headwind that's having a fairly material impact on the business. So that is a quick update on the advertising giants that are Meta and Alphabet. I do hope you enjoyed the video. If you've got thoughts on some of these results, down in the description below, definitely let me know. Do you think that Meta and Alphabet are going to really slow down in terms of their future growth? Or do you think they will be fine, they will keep growing, and they will continue to take market share from more traditional forms of advertising? Definitely let me know your thoughts down in the comments below. But that is it from me for this one, and I will see you in the next video. Cheers.